think we have most of the speakers here. There were a couple, let's say, tentative. One had an emergency situation with their apartment. I don't know the further details, but you know how those things go. So yeah, I expect a couple more people to join as this space is going on. But yeah, let's slowly get it underway for now. So glad y'all here. It's been a very interesting few weeks on the layer 2 front these recent times. A lot of stuff happening. We're going to discuss that today. If you have any questions, feel free to drop them in the comments. I'll also be highlighting some posts from the speakers that we have today for some context, to give you some flavor, so you can check those out. Let's see what else. Yeah, I would definitely say drop those questions in the comments, and I'll check them out from time to time, and maybe throw them in there, throw them in a mix to liven it up. So yeah, with that being said, I want to introduce the topic a bit more, but first I would like our speakers to just give a little bit of background on themselves. I would say one sentence about like or like one piece of information about like your general background, but also how you specifically relate to this specific topic. So yeah, Wesley, Data Innovation, and Alex, feel free.
Yeah, I can start us off here. How's it going, everyone? Yeah, I'm Westy. I'm a research analyst at Blockworks Research, and I mostly cover Ethereum and the rollup ecosystem, which is sort of how Arbitrum fits in here. I lead our delegation there, and yeah, super excited to be here. We were the first, I think, to ring the alarm bells on the issues with our AIP 1.1, so super excited to be here and speak about this.
All right, so I'm a long-time derivative traditional finance person, lots of offshore finance experience, and I just sort of find a lot of this space entertaining because these are often compliance meetings I recall from 15 or 20 or more years ago where, like, this solution to the problem isn't cool for some reason that, is reasonably obvious. And there may or may not be a solution, but yeah, it's a lot of deja vu, which is profitable, entertaining. Maybe there's something to learn somewhere in between. Yeah.
Hey, I'm Alex. I guess my background is I used to work for a high frequency trading firm. I built like a default DeFi protocol for the past year. Recently closed that down in around January, and I've been building out my own trading firm. And yeah, I am a large token buyer of Arbitrum, which is how we got in this interesting sort of story to begin with.
Yeah, let's start out there because I would say like the first moment I got air of this, as we say, like I knew about this was actually from your thread, Alex, and well, I started like slowly going down the rabbit hole, like okay, what's going on here? Checking out comments from everyone involved, and digging into that. So I'll give for listeners a quick recap, as objectively and succinctly as I can, and then I'll ask you speakers to add any comments if I miss anything or just add your flavor. So basically, what happened? Arbitrum did a huge airdrop, about 1 billion governance tokens to about 300K users. This was late March. And those holders of the ARB token are now considered part of the Arbitrum DAO. Okay. Then what happens is the Arbitrum improvement proposal number 1 for ratification gets put up. So basically, that means they're looking for improvement after the fact of some things. So it is like what they call an omnibus package that covers a lot of things. So everything from governance and emergency powers to funding and grants. And basically, that was passing. Votes were mostly in favor of ratification. Until then, suddenly, these so-called special grants were called out. And these special grants meant that the Arbitrum Foundation, was getting 750 million ARB tokens to spend without token holders' approval. And then the vote quickly starts going the other way. But actually, then it turns out that the Arbitrum Foundation had already begun selling those ARB tokens for stable coins, even before the community of token holders had ratified the organization's, nearly $1 billion budget. And okay, we'll get into that. Obviously, this is relevant because it has a lot of implications, not just for Arbitrum, but the entire Web3 governance space. So yeah, let's get into that. Guys, did I miss anything crucial there?
I mean, I would just say I think it's important to note that the team, the foundation, the entire process, everybody involved are doxxed, and there's a legal entity, and this whole thing is an in real life process, right? It's not that this is some team with cartoon avatars and nobody knows who they are, which may not change what's happened morally in some sense, but has practical implications for what's going on. I mean, you know who it is that transferred these tokens, sold these tokens, bought these tokens, airdropped these tokens, right? It's not a nobody knows situation. It's an everybody knows situation.
Great addition, and that definitely changes a lot of things. Okay, if no one has anything else to add on that, I think we created the good context for the discussion, the background. We got the basic facts. So yeah, let's start digging into how how things could have been better. Let's start with okay. I think it's obvious for most people that it's become a very painful situation for everyone involved. So I guess my first question would be, in your opinion, what has been like the biggest missteps that the Arbitrum Foundation made in this whole situation? Was it something about the airdrop? Is it the way they communicated things? Just the way they went about governance in general? There seemed to be some lobbying going on in that whole voting process. What are your thoughts on this?
Yeah, so my personal opinion here is the entire mishap here was a communication issue. And I think this extends all the way back to when they announced their token launch and specifically announced how the tokens would be allocated to different parties. If they had disclosed at that moment that a portion of the DAO treasury was actually being set up as a foundation, I think this would have relieved any issues going forward. And I think even if they didn't do that, at the very least, having better communication with AIP 1.1, basically outlining the fact that this was a ratification upfront and being, I guess, more clear about the 750 million, what it was being used for, and explicitly stating why they had to use 50 million, of which 40 million was given as a loan and 10 million was sold for operations. I think if they had been more clear from the start about their intentions, about this allocation, what it was being used for, I think there would have been much less outrage by the community. But the fact that they explicitly tried to hide this information, it seemed like, and to try and just sweep it under the rug until they got that yes vote, I think that's what caused a lot of issues and a lot of distrust from the community.
Yeah, I think Westy summarized it pretty well. I'd say I agree for the most part that I mean, they probably could have just allocated the foundation. It's 7.5%, and no one would have batted an eye. I think the CoinDesk article saying that it was like a slush fund that was like had no oversight to be used is like kind of overly dramatic, given that pretty much every ecosystem has a foundation that has pretty much no oversight, for better or for worse. So I think it's a good step in the right direction that like this mishap has caused Arbitrum to have a lot more basically accountability and transparency in like how their foundation funds are being used. Though I guess my one point of disagreement with Westy would be that even if they had, I guess, even if they were clear about it being a ratification and they spent 40 million tokens with Wintermute for with a market making deal, and they had sold 10 million tokens in the open market, even if they had disclosed that in AIP1, I think it was like very irresponsible of them to do that after the initial documents that were, I guess, distributed to all airdrop holders and token buyers rather than before, especially since like it's clear that they're planning this weeks in advance. I do think like as what I written in my thread earlier that like it does make the game unfair to people that are buying tokens with stablecoins. And yeah, we can dive into that later, but that's just my general take on what Westy said.
I mean, I definitely hear what you're saying there.
I mean, so I would just
Yeah, go ahead.
Weeks is being a bit generous. I mean, so I've gone to the Explorer here on my laptop. The first block was May 28th, 2021. Weeks suggests this wasn't a thing that was known for a while, and obviously the disclosure requirements are such that we can't be sure, but this is not a new project in that sense, right? And the ability to run the airdrop and run the allocation and run the whatever, all these processes, that's been around for a while. Been around for going on 2 years now. I Weeks suggest maybe a time frame situation that's not no time pressure. Yeah, not doing this properly under time pressure is different than not doing this properly anyway. So
Going back to Alex's earlier points, the reason why they had to do it this way, I mean, this is just speculation given the fact that they, like Alex said, could have just allocated 750 million of the initial token allocation. They had to do it this way, most likely for legal reasons, because they operate in the US. And I'm sure there's some, it looks better to regulators if the DAO decided to give these funds to the foundation as opposed to them just outright giving it to a centralized foundation. And so I'm sure that was why. And even so, like at the initial allocation, if they said, hey, the DAO treasury part of this is going to go to this new entity, and hey, we're going to have to sell $10 million for operations, and we're going to have to give this deal to Wintermute to market make, I think just being very clear from the start, even doing it the same way as they did would have gone a long way.
I mean, look, I think that's completely fair. The problem is that you can't state publicly you're going to do something because it avoids a legal problem, because that in and of itself is a legal problem. Yeah. This whole thing about how you decentralize a protocol that isn't centralized at the start because it's written by 6 people and such is life, that's challenging, and we don't have a solution to that problem yet. But this way of solving that problem clearly does not work, right? And at least running an open voting process about how to do it won't piss people off in the way that causes this kind of conversation to happen. I mean, I don't think anybody here disagrees with that one, right? It's there are challenging problems here, some of which are solved and some of which are not solved, but it's kind of known this is not a solution to these problems. Retroactive approval of decisions that have been made and won't be reversed. Yeah, I mean, nobody's okay with that.
Yeah, and I think that kind of explains the sort of nuance to the situation, because at the end of the day, like with the new setup in AIP 1.1, this is like a huge step in the right direction in terms of like the DAO actually did affect basically the oversight and the rules and regulations around, not regulations, but just like the setup around the foundation structure that the DAO didn't have power to do before, which is like a huge step in the right direction. I guess like the nuance is like how big of a step do we expect to be taken now, and like how close should we get to like the optimum situation in one iteration versus like multiple iterations. Yeah. And I guess that like sort of ties to what like I was proposing with AIP 1.05. Um, happy to give an overview of that, or if you want to do that, Helix.
I think you know best since you proposed it, so I'll let you explain it. I just for the audience do want to say we have two of the other speakers joining. Matt, who's also from Blockworks Research, and Kat. Hey man, feel yeah. I also want to make you guys feel like since you joined later, don't feel weird about like speaking up or having to be introduced first. Just like feel to get it. Just feel free to get in the mix whenever it seems best to you. Also, Cairo King, he's not on stage right now. He keeps like rejoining, so maybe something's not working on his end. But if you see him, he'll also be on the panel. Yeah, Alex, you did a proposal, AIP 1.05, to correct some of these things. I think you proposed, I believe you proposed to basically revert back the a lot of the things that were stated in the first proposal. Yeah, please fill us in.
Cool. Yeah. So me and a lot of my friends who had bought a lot of tokens on the open market, I think we'd bought probably around 8 figures combined of Arbitrum token. We're like, pretty upset with what happened, and like we wanted to. It felt like some of the things were being swept under the rug as like a sort of compromise for other concessions that they were making, and so yeah, we kind of rushed out a proposal. 1.1 was getting proposed in at the time that we proposed 1.05. It was getting proposed a day later. It was actually proposed by Westy Capital and Blockworks, which is like pretty cool to see. I was actually kind of curious, like who would actually propose it, if it was going to be someone from the team or it was going to be like, someone decentralized. But yeah, it basically asked to reverse most of the actions taken around 1.0, which involved moving the funds, the 700 million tokens left, back into the DAO treasury, reversing the token sale via Wintermute. So whatever of proceeds they had from the 10 million token sale they did with Wintermute, they would reverse it and buy it back in the open market. And the last thing would be to disclose the market making terms with Wintermute, given that like a large token allocation was given to them. I just thought it was good for people to know like, exactly how these market makers are incentivized, what the terms of the deal were, because it is very important in impact on the sort of trading in the open markets for the token in the next 6 to 30, 24 months, or however long the deal term is. So yeah, it was kind of rushed. A lot of people were annoyed about it not like following the proper governance process. It didn't stay on the forums for 72 hours before it was posted. They said it was like a non-constitutional AIP or something. And it did well in the very beginning. I think over 90% of the wallets have voted yes on it, that have voted. But given like the distribution of tokens in the Arbitrum voting system, it's very, I guess, top heavy, where the top maybe 10 to 12 wallets control over 50% of the voting power. It looks like it's going to fail, and the AIP 1.1 and 1.2 is going to pass. So that is the current state of things.
Okay, yeah. I believe Westy was also one of the people commenting on this specific thread. Let me see if I can find it back. Probably not. But I'm just wondering, basically, to the speakers here, what were your thoughts on the proposal 1.05?
Yeah, absolutely. So I understand where Alex and similar people are coming from, but I just, in practice, did not see the benefit for Arbitrum long term to do this. So I guess, and hopefully I'm not taking words out of Alex's mouth, but the basically goal of 1.05 was to signal that the DAO was still in power and that the DAO governance was continued to be strong, right? As opposed to under AIP1, it sort of seemed like the DAO wasn't in control of actual voting power of things that were going on. But in practice, I don't think this necessarily achieved its goal because, as a result, let's say the vote does pass, we send the funds back to the DAO, and then the DAO sends that 750 million back to the foundation, and we pass 1.1 and 1.2 alongside it. Well, the end result is exactly the same in both scenarios, where the DAO still has the same control over the foundation. It can um, change directors around the number of directors. It can force the foundation to do certain actions. It has the exact same power in both scenarios, except in the scenario Alex was proposing, it basically delays Arbitrum from doing anything for at least 40 days in my estimates. I mean, anywhere from 30 to 40 to a couple months, depending on how long it takes to vote on these things, to actually implement the swapping between wallets and getting the 10 million back, as well as disclosing the Wintermute deal, which itself could have legal implications. And so I think it just delays um, anything Arbitrum can do for a couple months, which is a very long time in crypto, for no benefit in the end, other than some sort of optics. And so that's sort of where we were coming from with 1.05.
Oh, okay. So I guess I'd push back on that a little bit. So, I mean, look, there's no question that people were lied to here. I mean, I don't think the foundation would even dispute that the original description of what was being voted on wasn't accurate, right? So ratification is a thing. It's a well understood concept legally, where people agree to terms and they have to get their parliament to vote for those things later, because governments have a system where somebody beyond the guy that shows up at the conference has to agree to a treaty. And saying, yeah, we ran this vote and you were supposed to agree, but if you don't, it doesn't matter anyway. I mean, on some level, you all were lied to. And the two choices at that point are to either do something about the fact that you were lied to or not. Now, whether the network has any value a year from now may not depend on whether or not the people who set it up lied to the people who invested in it, right? I mean, it's possible this network is incredibly valuable a year from now. It's possible it's worth zero. And neither one of those things, this entire space has lots of examples in both directions, although mostly in one direction, where people lied when they set something up and the price ended up being non-zero or zero some period hence. That's not really the question, right? I mean, taking the tool of pursuing people for lying to you off the table encourages people to lie to you going forward. The equilibrium there is pretty obvious. It's a fair point that entering into a dispute might, delay stuff by a couple of weeks or whatever. And yeah, fine, that probably impacts the price short term. Disputes are bad relative to no disputes. And it's also a fair point that requiring disclosure of a contract that you've not read could cause legal problems. I mean, that was not phrased well. I don't think anyone involved in drafting those proposals is a lawyer or familiar with whatever non-disclosure type provisions. Fine. But I mean, the more fundamental problem is that a group of well-known people off-chain lied to people about how their on-chain votes would be counted, and nobody seems to want to do anything about that, which feels like it will just encourage such behavior going forward. Because the only way humans learn, reference the last 10,000 years of history, is with negative consequences for bad actions. And, discussing whether or not in the next 3 weeks it's good for a protocol isn't the answer long term for that protocol, or for the space, or for really anything. I would not even sure argue is the right word, I would say. Yeah.
Okay, so to recap a little bit, I'm hearing different things. So on one hand, I'm hearing that some people, so Westy, for example, you argued that one, it's a bit of a just a symbolic thing, just like passing the 1.05 AIP doesn't really change anything about like the underlying thing, how things go. They can just keep doing that. But then on the other hand, I also hear from Data of Innovation, for
Oh, sorry.
example.
John, you go with John. Sorry, my mistake.
John, not all good. John, from John, for example, uh, that no, it is relevant because the what's the whole point of our governance processes if we don't make people accountable, and first off, and second off, if they don't keep to the outcomes of those votes. Yeah, anyone feel free to pick up here. I also just want to point out that I just want to also introduce DeFi Made here. Glad you were able to make it to the panel. Welcome. Feel free to jump into the discussion whenever you feel like. Same goes to Cairo King. But yeah, Matt, feel free to take it off.
Yeah, so I would just argue that as a delegate, our job is to act in the best interest of the DAO and the protocol. So even though we might have our own beliefs about decentralization, the processes that DAOs should, have, and our thoughts there, we actually have to vote doing what's best for the DAO and protocol. And, setting back 60 days of, and you even brought this up, John, it could be bad for token price, it could be bad for the protocol. So it's like we have to do our best to act in the interest of those that delegate to us, and that's why we would have to vote no on AIP 1.05 and yes to 1.1 and 1.2. Personally, do I think that if we had said yes to 1.05, it would do good things for a good precedent for decentralization and for the future of governance? Yeah, I do. That's my opinion. Not Blockworks research, but I do believe that. But at the same time, it would be negative for the Arbitrum DAO, which is like what we're actually supporting as a delegate.
Yeah, I think I can really appreciate those trade-offs. It's really like complex trade-off to make, but it almost seems like sort of like a decentralization NIMBYism happening, with like everyone agrees like these things should happen in principle, that like actions should be punished, like at least wrong actions should be punished in full in order to deter other actors in the space. And like we generally need to make like more of a push to actually respect governance, return value to Insight token holders as a whole. But when it comes to like, I guess, your specific protocol or something like that, then there's a bit of like a hesitancy, because the trade-offs become a lot more real with like, oh, okay, this would be because of the governance process outline, it would take 60 days to actually reset fully. Um, it's kind of complicated. And I feel like at least with regards to like the token price argument, like the token has no promise of accruing any value in its current state. Like there is, because of like securities laws and a lot of lack of clarity around there, there's no way it can actually participate in any upside or downside in the current way. There's no way you can get like distributed any funds or any profits or anything. So right now, governance tokens are essentially just dog coins for protocols, and that like go up or down based on like speculator sentiment and attention towards the protocol, and they don't actually have any like real sort of fundamental value behind them. Which is why like I do think, even though if Arbitrum, the foundation, were to spend 60 days resetting and going through the proper governance steps. Like, I do think at the end of the day, it's better for the meme coin in terms of value than it might be for, let's say, growing the Arbitrum ecosystem, which isn't necessarily aligned with the token price at all times, given the current setup.
I would just have to fundamentally disagree with the, Arbitrum is a dog coin in its current state. There's $2.1 million in sequencer revenue that's controlled by the DAO in addition to the treasury. So $2.1 million in ETH controlled by the treasury and, a ton of parameters that we could use to increase sequencer revenue on a daily basis. For instance, we could reset the sequencer to a map collecting address, or we could increase fees on the L2. I actually made like a forum post about this yesterday just to get the discussion started. So sure, like, are we going to pass a vote to return this treasury value that's from sequencer revenue? Are we going to be able to return to token holders? I don't. It would be hard to support that in today's regulatory environment. But are there other uses of these funds that can drive value to the ARB token? 100%. So I definitely don't agree on the kind of comparing ARB to a dog token.
Well, even if it generates revenue, it can't actually distribute it in the form of dividends in any way. And if you look at like what's happening with the Rook protocol, like the token's actually trading maybe like it was trading maybe a fourth of actual book value. It had $50 million or $100 million, $70 million in the DAO treasury, and the token was trading like a fourth or a fifth of that. So even if it generates a lot of revenue, like there is no clear mechanism for returning that revenue back to token holders, which essentially makes it a dog coin, I guess.
There kind of is a clear so there's a function in the sequencer contract which is distribute rewards. So it'd be extremely easy for the DAO to actually go distribute sequencer revenue to token holders. There's nothing fundamentally making that impossible. As ARB token holders and delegates, we could go vote on that today. But I do understand that we've seen so much pushback with Uniswap and their fee switch, and I do tend to again Rook, and there's plenty of other examples too. Like at one point, the Ohm treasury was worth more than the value of the token, but there is fundamentally nothing stopping us from distributing these rewards to token holders either.
Well, okay, so I guess that there's a legal problem, clearly. Distributing it is legally challenging. It may cause problems for people. You see this in traditional finance forever, where closed-end funds, for a range of reasons, taxes, regulation, whatever, liquidity, trade at prices different than the sort of mark-to-market, the underlying. Fine, that's a thing that exists. People trade whatever those rules are. Here, the securities laws make it challenging to distribute the profits of a common treasury owned by a bunch of whatever anonymous token holders. Whatever. It's not a value judgment on if that's correct. It's a statement about the world as it is. But more broadly, there's a discount for companies that are run by liars. And on some level, this is now a protocol run by liars. And you see this in finance, where conglomerates run by people with bad histories of running roll-ups or frauds or whatever, trade at a discount, multiple relative to earnings or book value or whatever it is. The industry, that's a thing. And this should now trade. Let's pretend it's just a protocol that generates money, ignore securities laws, trade a lower multiple to earnings of a network that isn't run by people that have promised to do something and then ignored a vote and rejected it, right? That's not, and there's no way to back out of that one.
There's two things you said that really confused me, which is one, protocols run by liars. Today, the protocols run by the DAO, right? Off-chain Labs has a large allocation of tokens to the team that's currently vesting, but the protocols run by the DAO. It's not run by Off-chain Labs anymore. So, do I, condone what Off-chain Labs did? No. Do I think they were lying? Possibly, but not necessarily. There's the old saying, don't attribute to malice, which is probably stupidity. Sorry if I butchered that. But, and it also back to the point of the legality of, quote unquote, turning on the fee switch, returning revenue to token holders. Again, there's nothing stopping us from doing that. A large portion of this DAO is not US based. If we turned it on tomorrow, would there probably be pushback to Off-chain Labs and to some of the delegates from US regulators? I would imagine that could potentially happen, but there's nothing fundamentally stopping it from happening, and there's nothing that they can do once it happens to make it stop either. It's this is, DeFi. Yeah.
Well, okay, this is a bit of a fine point, but if a large fraction of the voters are American, clearly they care about U.S. laws, whatever. And similarly, okay, it's not run by people who have a proven history of making promises they didn't honor, but a large fraction of the voters are same, and this is a perennial political problem, and I'm trying not to be political with this, but like weird dictatorships in developing countries where the same guy wins the presidential election 8 times in a row with 96% of the vote. Like if a large fraction of the votes are people that have a history of not behaving well, I'm not really sure governance process is the right word. It doesn't mean it's useless, but I don't know that that's a process people assign a high equity multiple to. That's not a moral statement, it's a financial statement. The PE of companies whose management has a history of not necessarily behaving in the best interest of shareholders is lower, than others, right? I mean, if anybody's seen the show Silicon Valley, a lot of those characters are based on real people and tech companies that do or do not trade at high prices as a result of their behavior.
Okay. We're talking a lot about this specific situation right now, but also want to take the opportunity. We've been going back and forth here. Good points from all sides. You got to balance long term potential for this project to be successful that might be better served by actually reverting some of the decisions that have been made. But on the other hand, yeah, what if you don't succeed in the short term right now, and like if you delay this project with 2 months, then if it's not successful in the short term, it can never be in the long term either. So it's sure like it's not like we're gonna come up with a solution here and be like, oh, this should have been what's happened. There are good arguments for all sides, um, but I think it's also a good opportunity to you know zoom out a little bit and have a discussion that's not just about this specific situation, but more about, okay, what does this mean for our space in general? So there are a couple things you can think of there. So like, what does this do with the perception of crypto from the outside world? Um, a lot of people are already critical. So how's that going to impact that? But also, how does this shape further governance processes for other projects? Does this set a certain precedence? Um, I'm curious what your guys' thoughts are in that regard. Let's zoom out a little bit, not just this specific situation, but what are the most important implications in your opinion?
Yeah, totally. I think Helix, this is like a super good point. I think like there obviously is like a metagame and like a game theory around like what is accepted, and like it is a zero sum sort of competition for resources in the day. And I think in its current state, like people view decentralizing as a way to raise a foundation on retail funds. That's essentially what's going on here. When a protocol wants to decentralize, they're not doing it for actual like the sake of decentralization. It's so that people will buy their token price either from the airdrop or something, and they will fund an ecosystem based on that, give it resources to grow, hire, market, do BD, et cetera, et cetera. And I think like from a retail token buyer's perspective, um, I can appreciate that like this is not the only ecosystem I'm involved in, and like because of that, there are like some I guess trade-offs personally I'm willing to make in terms of like how much should we make this sort of set this as an example versus like how much should we preserve like the timeline of the Arbitrum Foundation ecosystem. And I think like to your point, like in the grand scheme of things, I think like fully correcting what happened from a pure token holder's perspective, from an investor that like buys governance tokens on the open market, making sure that like things are done the correct and fair way is like of the utmost importance to me.
Okay. I guess fair enough. Like that all sounds fine. I would just add that a lot of this behavior is common forever in what are now securities markets, weren't always called securities markets. And you know, the the so Bitcoin is a successfully decentralized thing, right? So no one knows exactly where that came from, exactly what happened. There are various pools that contribute hash power, whatever, fine. That route seems to work, where it's sort of given away and then people participate for whatever reason, and then eventually we find an equilibrium where lots of people participate and it's fine. We've not yet found a way to take something built by a bunch of people that required a bunch of dollars to do so and then receive those dollars from somebody and then flip it out to a diffuse community, right? And that sounds a lot like sort of standard securities fraud, right? The ways people have been trying to do it. We've seen one that worked. We've not seen a lot of others that worked. I don't know. It feels like things that didn't work, we should go after the way they normally don't work. And then whether or not there's more than one solution to the problem that works, I guess I'm certainly open to. That one worked. Um, but kneecapping yourself and saying we only care about the value of this token, so we're ignoring the fact that it's a train wreck, whatever how it got there. Long term, that's clearly not going to succeed. So, short term investor, long term investor, whatever. But this is a challenging problem forever, and we've seen this issue before. We know how this ends. Need to try harder. Maybe that's not constructive, but need to try harder.
Okay, so yeah, I'm just curious about the specific examples you were alluding to, like the ones that did work. You mean Bitcoin's the one you named, but also another one? You mean Ethereum?
Oh no, I just mean in general. So, well, there's the common meme, identify all Binance Smart Chain validators, right? It's a bunch of pictures of CZ. There are lots of things out there in DeFi that no one believes are genuinely decentralized. Fine, whatever, not necessarily a problem. Proposals in MakerDAO often get voted by a handful of people. There's at least a formal process for dealing with it, and you're not talking about identified people promising things out of companies and not honoring those promises. That's a step forward, right? I mean, what was the Solana lending protocol? Solend, where they rejected proposals that passed. This is following either Luna or FTX or whatever a year ago. They rejected proposals that passed because the protocol couldn't sustain honoring the proposals that passed. But at least they acknowledged that they couldn't do that, right? Whereas here, what we're saying is there's a voting process and it's just irrelevant because a group of people run it. And then we're going to ignore the fact that those people disregarded what we thought this time because they're going to listen to us next time. That's not a token you can buy in good conscience, not even as a fiduciary, as a person, that understands how the world works. And there are other examples, mostly their DeFi lending protocols that blew up last year that had proposals that were either rejected or sort of passed. And either way, the other way around is what was implemented because they couldn't sustain something else. It's definitely Solent. Otherwise, I'll have to Google the rest of the.
Yeah, okay. But in that case, okay, extrapolating from your point here, it does seem that, if this goes down the way it seems to go down, it also kind of suggests back to like that zooming out level, right? It suggests that projects can just keep doing that because it's just okay. It's good marketing to say, hey, decentralization. airdrop. Everyone's in the DAO now. But in the meantime, the way things really are is quite different. And I guess what you're saying is that, if we just keep accepting that, I guess, as a community, it's just going to keep happening. And
Yeah, I
that's
mean, this is probably the most contentious part of the Twitter conversation I had with Alex, where, I mean, there's a famous economics paper from the 70s, The Market for Lemons, George Akerlof, who got a Nobel Prize for this. This paper is the reason there are lemon laws in most of the world. So a lemon law is if you buy for example, a used car that turns out to have a tremendous number of problems, you can return the car to the dealer and they give you your money back. Because absent regulation, lots of markets turn into people who are misrepresenting what they're selling. And that's profitable if there's no regulation that forces that back. The paper is famous, the Nobel Prize, is because he showed in a very simple model how regulation can actually add value for lots of people. If here we're saying that we have access, we have off-chain recourse, we have the ability to enforce rules, and we're just not going to, we already know that's not helpful, right? I'm not saying what Arbitrum Foundation or developers or whatever did was good or bad. I'm saying if we don't deal with this in the way that we're supposed to deal with this, we're incentivizing people to do this going forward. And that can't be good for anybody, except for people that we're not defending, right? I mean, it's good for somebody, but that's not.
Yeah, I thought that was a good conversation we had on Twitter, even though it came off with a rocky start. I do think, like, at the end of the day, like, regulation is the answer for this. Like, there needs to be an enforceable overseer that can force people to act good, even when, like, I guess no one is watching. Um, and I guess, like, the point of contention that we had in that conversation was, like, what is a intermediate solution in between now and the time we get to that point? Because, like, any clear regulatory oversight on these kind of things is probably years away. And I don't think we can just ask all these protocols just to hold off on raising funds just to wait for regulation. So in the meantime, I guess the reason why I wrote so much on like the public forums was because I do think, like, publicizing it and, like, sort of name and shaming it does add a cost and a material impact on these actions and their token price. Um, that does alter the game a little bit, even though it's not, like, fully to its optimal state.
I mean, okay, I wouldn't necessarily argue with that, except to say that shame is probably not a relevant disincentive for people whose intent is to scam you. But okay, um, yeah, it's clearly going to be a while till this stuff is either regulated, normalized, or banned, or whatever the outcome is. And yeah, it's a challenging investing environment till then. I can't disagree with that. Yeah, I just think that overall, using all the tools in your toolkit to try to make stuff reasonable is the best thing long term. Although, yes, as per the earlier conversation, short term, delaying stuff by even a week or a month or whatever is negative. Yeah, fine. I investing's not supposed to be easy.
Yeah, I think, like, a lot of the outrage here comes from, like, Arbitrum's perceived sort of goodwill in the community. I guess in the spectrum of Ponzi's and scams and frauds, like, if this happened to something like Hex or some, like, I don't know, some random Ponzi, like, no one would really care because you kind of, like, know what you're getting into when you buy these tokens from, like, let's say, a non-teams. But yeah, like I said, like, in the spectrum of things, like, Arbitrum should be they should be pristine grade, not Ponzi. And, like, if a pristine grade, not Ponzi, can do this to us, then, like, anything can do it to us. And I guess that's where, like, it's, like, just the difference of expectations and reality is just really concerning to me, at least, and it still is. But Yeah, I'm curious if any of you other speakers have any thoughts here. If I'm thinking about this wrong, or if you have any disagreements with, because I feel like me and John are relatively on the same page in the compass of where we stand on this. But yeah.
Okay, I mean, I'll speak briefly before let somebody else, whatever. I mean, I think that's maybe not harsh enough, right? So if you know who it is that didn't tell you the truth, you should at least go after them. Like if you invest in a project run by anonymous people, that's your risk, right? You have no off-chain recourse. But if you invest in a project run by people who you have off-chain recourse. Either use that, or you're going to lead people to believe that off-chain recourse doesn't exist, right? You should pay a lower multiple for anonymous teams than for doxed teams. That's a rational thing. Nobody invests in companies with anonymous CEOs. It's not a thing. I mean, Tether, I guess, is a special case. So, eh, I, I, I don't have as much sympathy maybe for that view, right?
DeFi made
Sorry.
here. I saw you were unmuting. Would you like to add anything?
Yeah, hi everyone. I missed the beginning of the call, and probably I missed some of the thoughts which I want to say now. Um, just like my observation, like around DeFi and DeFi governance. I mean, there is like decentralization and governance. Governance is a meme now. Uh, I mean, there is self-enforcing governance when when there is a code, yeah, which will be implemented. I mean, immediately after the vote. This is one thing. But all this governance, when multi-sig has to decide if they agree on this governance or they don't agree, this is not a real governance, because I've seen this already in I've seen this example already. This examples already a few times when there was a particular governance vote, and then like multisig is deciding what to do and how to do and when to do. And besides that, governance is quite centralized because most of the tokens are held mostly by the team or like early investors and so on. And they are active voters. So even if they have, for example, 30% of supply, it's not like 70% of the supply will be voting against them. There are not so many active governance participants in the space. I mean, still, at least some tokens will be like, with some market makers, maybe on Access, maybe some long-term holders which don't care, or some speculators, traders, so on. So there are not so many active governance voters, participants. I mean, so most of the time, governance is not very real. I've seen only very few examples where governance really exists. One of the protocols is MakerDAO. I think the governance system is like very, very advanced. You know, there are a lot of many. I wanted to say there are a lot of conversations around governance proposals, and they're very deep. You know, like a lot of research around it, and like I think this is um, the best governance I've seen so far in the space. But still, as long as multisig decides to implement or not to implement the decision, it's not like real governance, because there is no law which will force people, you know, to do what was decided by governance participants. And also, if the team is anon, like they don't have any responsibilities. Let's say if team is not anon, okay, they might care about the reputation, but otherwise, I don't think that governance is really decentralized as someone is seeing it.
Right. This goes back to a point we discussed earlier, that maybe some of this is a bit symbolic, And if it is, that's kind of a problem. I do want to be mindful. Thanks for weighing in there. I do want to be mindful of everyone's time. We're very close to the hour mark. If you guys want, we could definitely keep it going a couple more minutes. But I also, people probably have other commitments. I do want to give everyone of the speakers an opportunity to let the audience know where they can find them, any projects that they got going on, any initiatives that they might want to have support on from people. And I do want to ask the audience to give these guys a follow. Personally, I've been following them for a while, and they always bring interesting and valuable, well, content for lack of a better word, but I would call it insights, information, sometimes data and analytics, which is very interesting. So definitely give them a follow. Other than that, yeah, let me know if you just let people know where they can find you and support you. Before we close it out, Alex, go ahead.
Yeah, I appreciate you guys listening. I'm probably gonna make a write up on this too. A little disappointed that the main proponents on the other side dropped out of the spaces, but I was curious to hear their points. Like, I get the nuance on like the specific example, but like in the broader scheme of things, like it doesn't seem like there are many strong voices against like what we're advocating for. But yeah, I appreciate you hosting the spaces, and it was a great talk, and thank you all for listening.
And I guess in a similar vein, I find it entertaining that they nobody wanted to debate the other side, and they just orchestrated a bunch of votes to vote down the proposal to behave in a way that anybody in primary school would have been taught is the correct way to deal with other people. And that's concerning for the space overall. Our entire business is based on finding truth for trading risk management purposes. So, it's no judgment. It just is what it is.
DeFi made here. Any last words?
Yeah, thank you for inviting me for this spaces, and thank you everyone for listening to me. And sorry for my bad English. I'm not a native speaker.
It's all good. No worries. Thanks everyone for being here. To the speakers especially, but also definitely to the listeners. Thanks for joining. We're doing these weekly, so look out for the announcement for the next one, the next week, which will be on the crypto use case in developing countries with OX Kofi and or actually 0x Kofi it is, and Manu Al Zero, and definitely some more guests will be joining. So yeah, with that, give these guys a follow on the panel right here, and I'd love to see you guys next time. Peace out.
Thanks, guys. Later.